Hello everyone, Andy Moss here, tradingadventures.com with your Tuesday market update as we start to see that perhaps this stock market is still vulnerable to some news. Little bit of a dip here, nothing major, but we do see the indices across the board pulling back to test their rising 5-day moving averages for the first time since April the 7th. And that's quite a long run to be so steadily above a rising 5-day with no change in direction, or very little change in direction, after first crossing over back on March 31st. So the market is strong, but perhaps not bulletproof. And if you are the kind of person that likes to try to assign a reason for moves in the market, it was announced at, 3:50, 10-15 minutes before the close, that the peace talks in Iran or Pakistan or wherever they were meeting had hit a bump in the road, and that key figures would not be attending, and that perhaps that deal is a bit on shaky ground. And that's what came in. If we look at the futures markets here, wrong chart. Here's the same information as the roadmap on the stock index futures, the S&P 500 here, and we've just been a little bit of a slow grind lower for the day, capped off by a bit of abrupt action here at the last hour of the regular session, testing the rising 5-day here, trying to bounce on a little bit. This is the week-to-date anchored VWAP up here, and so now we've got this pinch scenario with the range getting tighter at the moment, and that's pretty well the case across the board. NASDAQ futures are back over that weekly anchor slightly at the moment, but totally normal market action. And from several days back now, I've been making the point that when the prices are so extended on the daily charts, the proper action to take is to zoom in and get to a shorter time frame and find your reference levels there. So this has been and is our first point of reference on the way up. This is perhaps acting as support here as prices trying to hold these rising 5-day moving averages across the board, not quite getting down to them on the Russell 2000 over here and the Dow futures over here. So let's go out to our daily time frames and look at the major indices and some of the sectors and see what's going on. We now have SPY from this low to this high, basically straight up for 13 trading sessions in a row. That's a move of about a little over 13% from the bottom to the top, not the closing prices. And now we see some selling come in as we've been riding well above a sharply rising 8-day moving average here. RSI got a little overheated, and so another thing that we've been looking for is we don't know when exactly or to what extent a pullback will occur, but it absolutely will occur. Things do not go straight up forever. And so now we've got a little bit of moderation off this recent high back a few days ago. So another thing to notice on this daily chart, and I'm not going to point this out on every chart I go through, but if you pause the video or glance quickly, notice the daily volume has been a fraction of the 20-day average volume. The current average 20-day volume on the SPY is about 75 million. We are about 2/3 of that today, and it's kind of been rolling around in that neighborhood for a couple of weeks, or almost the whole month of April now, after this big day on March 31st, and the average is coming down. And that's a common theme across all of these indices and sectors and even individual names. So does it matter in and of itself? No, because obviously the market can go up very strongly even on light volume, but it's just a curiosity, just something I point out, not a trading signal, just one very small piece of the puzzle. Moving on to the Qs, same situation here, new highs. We've got a little bit of consolidation here for the last 3 days, and the 8-day is still about 10 points below today's closing price. So a little bit of a rest and a revisitation of this area here, or perhaps even down into the area of this extension level. We know that this was very important on the way up, and prices chopped around We'll be back up to the SPYs here for just a minute. That is a level that we watched with some curiosity for quite a while. So I may have laid that out the other day. My ideal scenario would be a bit of a throwback to this level, some consolidation, and then a resumption of strength that would make for probably a pretty attractive long entry setup with a reasonable stop level somewhere just below that area. So we'll see what happens. That's just an ideal possibility, and the market does not care what any of us think is ideal. DIA back in this shaded area. We spent a lot of time here over recent months, and same kind of deal here, but an outside day here after a very small range yesterday, and testing that rising 5-day moving average just about perfectly there on that last 30-minute bar of the day. Matter of fact, the low of that candle was $490.32, and the 5-day finishes out the day at $490.33. So it is relevant. It's why I watch it, and why I keep it on the chart. It is a reference point. IWM, more of the same, no surprise. And I'll point out again, volume, a fraction of the rolling average, which has been declining for the whole month of April so far. Bitcoin is holding up pretty well. This pink line is the year-to-date anchor. It's riding the anchor off of this breakout candle here. It's got the 8-day moving average rising right there close to it, and trying to make progress but not running away. But Bitcoin is trying to show some improvement there. The dollar, bit of a pop today, no big surprise there. A little bit of a rise in volatility over the last couple of days, but nothing dramatic. And the overseas markets are already below their rising 8-day moving average. And we've got some price action here for recent memory, but to me, it looks like a bit of an air pocket here from today's closing price down to the slightly rising 50-day moving average there. So that's something that could happen in the ACWX. Not trying to predict that, just pointing out one possibility there. Bonds. Bonds also taking a break like stocks. We are having some trouble here from the underside of the 200-day moving average. Here's the declining 50-day moving average, the year-to-date anchored VWAP. All of those have combined to produce some resistance or some overhead supply for the AGG bond index. And now we can look and see, does it want to come back down into this area, which are some recent lows and a rising 21-day moving average there. Treasury bonds. Similar situation, with the exception that the 50 and the 200-day are both slightly declining and still well above price. It's trying to hang on to this mostly flat 21-day moving average here. So if it were to lose, let me just draw a little reference point in here like this. These trend lines are not incredibly important, but just a visual reference. Losing this area of trend here could indicate more downside ahead for Treasury bonds. We see them well below a declining 5-day moving average over here on the 30-minute time frame. Oil, stocks down, oil up. No surprise there as the shipping lanes get clogged or restricted or whatever the case is over in the Strait of whatever. Oil back above a 5-day moving average, which is trying to round out and potentially start rising here in the coming days if price action were to stay up in this area. This is the price action that will need to come off of that calculation for it to start rising. But if price holds up in here and we get through the rest of this day tomorrow, then that will be rising and we could see some more upside in oil. But then again, this anchor off of the breakout from back in February, it was support. And now, will it provide resistance? It's trying to do that so far. Too early to tell for sure yet. But that's just an item we can keep an eye on there for oil. Gold seems to be finding resistance. And this is a messy chart in here. I should take some of these things off, but I'll leave it for now. There's a lot of different lines drawn in here as gold has been unable to get back to and beyond this retracement level, just under 4,970, and matter of fact, it's back down fairly strongly today, or weekly I should say, But still, overall, just congesting and consolidating in this range from roughly 4,600 to 4,900 there in gold. So no real directional indication there yet. Let's go over to some of the individual sectors and areas of the market. They look largely the same as the overall indices, but again, testing a rising 5-day moving average, very light volume for the whole month of April so far, an extension. So a little pullback here is not to be a surprise or to be unexpected. Maybe it finds support at the rising 8-day. Maybe it wants to come down and test the 200-day. We'll only know after the fact. But the point is, it's probably time to play a little defense and be on the lookout for those slight dip buying opportunities and names that you really enjoy or really want to be a part of and maybe didn't get into yet. IWD, the value portion of the Russell 1000, it may find support a little faster here. This is some recent highs back in February, mid to late February, and the polarity here in action, what was resistance from below, could become support on tests from above. Lines up pretty well with the 5-day moving average here and the 8-day just below that. So maybe value, if we think back to the IWM, let me go back over here for a minute. One thing we can remember about that is it doesn't always trade cleanly. It doesn't always respect the levels as well as some other parts of the market. So maybe WM needs to come down in here as well. And maybe the value portion of the Russell 1000 needs to overshoot this area a little bit, maybe getting down into here and then come back up and resume the uptrend. Anything can happen there. Just laying out some different scenarios that I will be watching for. Consumer staples or discretionary here, more of the same. Looks much like the indices. Didn't make new highs, but it's still extended. It's still on light volume, and it still has a long gap between today's closing prices and a sharply rising 8-day moving average, and it is testing its rising 5-day moving average over here. Staples have not participated in this uptrend nearly to the extent that the discretionaries did, and that makes perfect sense. This is one of the areas that we look at as a signal of or an indication of risk on appetite. When things are going well and people want to be more growth oriented or more aggressive in their portfolios, they're buying the discretionary stocks more than they're buying the staples and the perceived safety stocks. So no surprise that this is just kind of bouncing and rolling around here above a flat 200-day moving average. If this starts to go up while the discretionary comes down, then that will be an indication that people are positioning, market participants are getting more defensive. That's why we look at those different sectors and consider what's going on. The stocks, semiconductors, still incredibly strong. It's hard to be too cautious or certainly not bearish the overall market when the semiconductors have put in a move like this and continue to hold up very well. They are extended. They are well above the 8 and 21-day moving averages. There is a substantial gap between the 8 and 21-day, and the volume has been very light. The 5-day is way down here at $410.52. Some rest and consolidation will come for the semiconductor index at some point. And again, we don't know when or to what extent, but for now, it's still climbing and prices are going higher as the buyers maintain control. XBI, biotech sector, a little bit of a break here, but just a very nice clean after a bit of an overshoot, looking like it was losing potentially a key level of support in this 120 area. It got a large gap up back on March 31st while the rest of the market started to recover from deeper lows, and it's just been virtually straight up ever since. Maybe it comes in deeper. Maybe this is an action or a sequence more like this one in this area where it touched the 8-day and then started rising again. That is the action in XBI. Software names coming from the abyss and climbing back up over all but the 200-day moving average, back over this anchor from the highs of October of last year, and now an indecision candle. We had a large range above and below, and prices closed basically where they opened the day. So is this going to turn out to be a failed breakout and software comes back down? Who knows? Your guess is as good as mine. But I can tell you that when you see a candle that with a shape like this, where the volume or the open and close are the same, and we call that a very small real body of the candle with very long upper and lower shadows, that is indecision. The buyers and sellers wrestled all day and couldn't really make any progress one direction or the other. The only thing we can say for sure is that today's closing price is higher than yesterday's price. So technically it was a positive day, but into this area of recent highs, into this anchor off of the all-time high, or at least this high from October, maybe not quite the all-time high, but indecision there in software indicates to be on the lookout for a potential deeper rest there. And the Mag 7 names, they look like the market, as the Mag 7 individual stocks have been leaders on this rise. So no surprise that they look very similar to the indices here, with the distinction that Microsoft and a couple others prevented it from making new all-time highs like the indices did. Financials, just a couple more here and we'll wrap it up. Financials having some trouble at the flat 200-day moving average. We want to see the financials continue to be strong and try to show some leadership on the way up if the overall health of the market is to be trusted and believed. And XLE, like oil, getting a bit of a bounce. This pink line is the year-to-date anchor. This is the anchor off of, I'm not sure what the significance of that candle right there is, but if we just draw it from right here or even right here, it's not going to change all that much. We're seeing some support at these two anchored VWAPs here from this reversal candle just a couple of days ago. Now back over a flattening 5-day moving average, and if tensions in the Middle East continue to raise oil prices, then the energy sector will likely have another bit more of a bounce in it. Can it get above the 50-day? Can it hit the 21-day and start moving it back up? Time will tell. And only one Mag 7 name to look at today, and that is Tesla, because they report earnings tomorrow. All eyes will be on Tesla as they share the results and we see how the business is going, so on and so forth. So kind of like we saw in the XLE bouncing from the pink and the orange, Tesla has found some resistance here at the pink and the orange lines. So it's right back in this area that it's touched several times, both on the way down and on the way up. And we'll see it once again. Does 385 to 387 hold any real significance right now? So far today it is, but on the shorter time frame, price is below a declining 5-day moving average. We've got a coin flip event, a binary earnings announcement tomorrow. The results could take it either way. So that's your look at the market for today, Tuesday, April the 21st. The shorter time frames are the key right now. As you look at, one more time, just to give example, if we're considering the S&P closing today's action, 6 points above a very steep 8-day moving average, and what's this? We've got 704 down to 671, on the 21-day. There is 35 points or so in between the closing price of today and the 21-day moving average. So perhaps it makes some sense for these two lines to get a little closer together through either a time or price correction. Once again, supports the case that maybe the SPY comes back down into this mid 690s area, and then we start looking for some bigger support and a resumption of strength there. But back to the point, in the meantime, the shorter time frames are your best risk management tool. Here's the SPY on a 30-minute time frame. This is the same extension level. 695 is the area, and we've got about 10 points to go. The 21-day was way down in the 670s, which corresponds loosely right now to this anchor off of the recent low back on March 30th before things really ignited and took off. So continue to use these. Zoom in to your smaller time frames. Manage your risk on the way up as well as the way down. You've been trailing your stops probably as the prices go up, and if they get hit, respect them. There will be some oscillations, some pullbacks, and more setups to come in the future.